966.
We are speaking now with Colby Connelly, Senior Analyst with Energy Intelligence and a non-resident scholar with Middle East Institute. Colby recently wrote a piece for MEI entitled, "Did OPEC Plus Side with Moscow?" We're going to be discussing that with Colby. Colby, thank you so much for joining us today.
Thanks for having me.
Hey, Colby, I'm really glad to have you on. One of the nice things about the 966 is we can sort of do whatever we want. And we have, we're scheduled out, several weeks to a month. But this was an event happened. But before we get there, I wanted to give a shout out to Energy Intelligence. This is really a well-established outfit, 70 years. I think they first started publishing the Oil Daily in 1951. What's your major focus over there, Colby?
I'm a senior analyst with the firm's research and advisory practice. I'm focused mostly on supply side oil and gas dynamics around the Middle East and North Africa. That includes OPEC Plus, as well as a lot of energy transition dynamics. But I think there's really only one of those we're here to talk about today.
Well, and I know you're deep in the weeds on this, which is why I'm delighted you can join us today. So, a little something happened last week, October 5th. OPEC Plus actually had her first live meeting, in-person meeting since 2020 in Vienna, Austria last week. And the big takeaway was they decided to reduce their quota by 2 million barrels a day, which was a bit of a surprise. I think people were anticipating a cut, but not maybe 2 million barrels. And as we've seen, and through our daily newsletter and through your work, Colby, it created a bit of a political firestorm over here in the U.S. And there's all sorts of things being, in the press and things being said, this and that. The reason we wanted to have you join us today is we sort of want to look at the market, at the dynamics, the actual mechanics of the market. What led to this decision? What might be the outcome? But so with that sort of intro, can you tell us a little bit about OPEC Plus's thinking on this?
Yeah, absolutely. I'll break this down across supply and demand, kind of looking into to 2023, because that's really what this is about. Demand will paint a picture a bit more of where the market dynamics are for next year. I think the key word there will be uncertainty. But then I'll turn to supply, because that will focus on the Russia angle a little bit more, which is that's at the heart of the controversy. So that's the fun part, right? And I just preface also by saying that there's a lot of disagreement about this decision among people that I have a good deal of respect for. So I'll navigate this as delicately as I can and just try to keep it with just the facts here. The first thing I think that we ought to understand, actually, even before I get into the demand side, is that the 2 million barrel per day cut that was announced in Vienna is not an actual 2 million barrel per day cut. It will come closer to probably something in the range of 1 to 1.1 million barrels a day. That has to do with a lot of the actual constraints that the organization has. I'll get into that a bit more on the supply side of things. But running the numbers and looking at where reductions can actually be made from producers that are hitting their quotas each month, we're really looking at something that's closer to 1 million barrels a day. Of course, when you mentioned earlier that a lot of people had expected a much smaller cut, that would have been commensurate with what I'm talking about now, in the sense that we'd have something, if the cut were 1 million barrels a day, it might be, say, closer to 500,000 or even lower than that. So that's really kind of, I think, the story behind some of the sticker shock, so to speak, that we had coming out of Vienna last week. But going into what the market looks like for 2023, there's a lot of volatility and a lot of uncertainty right now that makes forecasting particularly challenging, much more so than it has been in previous years. And I think a lot of people would probably argue that it's even less certain than when we were looking at the sort of COVID rebounds a year or so ago. And I'm trying to explain some of the variables that impacted the OPEC plus perspective here somewhat. So if I'm framing things that way, that doesn't necessarily mean it's our house view. But one of the major things that is impacting the economy more broadly, but oil markets aren't spared, are the interest rate hikes that you're seeing coming from the Fed and other central banks around the world. That's led to a very strong U.S. dollar. Crude oil and a lot of refined products are, as you probably know, traded in U.S. dollars. So this is particularly difficult for large developing countries. The cost of their imports can kind of go up overnight with some of these moves. Similarly, we're looking at possible recessions around the world. I think at the stage we're at now, it's more a question of when rather than if we get there. Recessions are kind of, I think, self-explanatory for their impact on demand, but with a range of opinions on when that's actually going to take place. An organization like OPEC Plus making a decision on supply action is particularly challenging. And in China too, a thing that's had a major impact on demand is these zero COVID lockdowns they've got. That if it hits an industrial region or particularly populous region and shuts everything down, that can take a significant chunk out of oil demand. And it's something that's difficult to predict. I mean, I don't pay a ton of attention to China internally, naturally, but headed into winter with infections, potentially going back up, that's something we may see more of. So China has a huge ripple effect, of course, across oil markets when their demand is impacted.
Well, it's fascinating, I guess, to see the different sides. And so the OPEC's a monthly report came out today. Right. This is the 12th October, and it significantly lowered its global gross domestic product forecast from for 2022. It dropped it from 3.1 to 2.7, from 2023 3.1 to 2.5, and it cited specifically elevated inflation you just talked about, rising interest rates, and geopolitical tensions. IMF just came out with its report, and it moved down its forecast for 2023. We see possible significant COVID lockdowns in Shanghai and Shenzhen, just as you pointed out. There's a lot of things that we don't know how it's going to play out. And from the OPEC side, Prince Abdulaziz bin Salman, the Saudi energy minister, basically said, his quote, "We wanted to give the market guidance. As it is today, we feel much more assured we should give that comfort to the market for 14 months. If things change, we will tweak." All right, so you have this, OPEC is saying, we did this based solely on the fundamentals of the market as we perceive it. In the US, it's simply, why are you siding with Russia? And let's break that down. How does this impact Russia? And we'll get into some other aspects of it that might have played into the OPEC plus decision. But how does this impact Russia?
Well, there are some Russia-related demand factors here too, and they are all things that, for the exception of one, OPEC plus has really found difficult to try to project the direction of the market with. And I'd also point out that OPEC plus, or I say OPEC rather, for its internal reports that it produces, I mean, they generally have a different view of the market than a lot of other forecasters, those being IEA or US EIA here. But their projections certainly, I think, have the potential to shape the supply impact quite a bit more. But back to the Russia-related demand factors that I did mention, one of them, which is the more minor one, is something called fuel switching. That's likely to be concentrated in Europe, and that's because of scarcity of natural gas. Obviously, they're certainly not getting anything through the Nord Stream pipeline anymore. And so you'll have power generators that will switch over to liquid fuels, using diesel, maybe in some instances fuel oil. that pushes demand upward. And it may not only happen in Europe with gas markets being tighter, but the things that really do impact Russia here, and that OPEC Plus has been kind of expressing its frustration with, are really a lot of the EU and G7 policies on Russian crude and refined products. So the EU will have embargoes on importing Russian crude that will come into effect later this year, and one on refined products early next year. It's difficult to see exactly how implementation of that is going to go. Nothing like this has ever been done before, and even more volatile really is the potential for the impacts of this G7 price cap, and that's sort of a product of the U.S. Treasury. I think that the design philosophy was to limit Russia's income from oil exports while not totally blowing up the trade of Russian oil. But we just had our annual conference in London last week, the Energy Intelligence Forum, and there were a lot of attendees who were vocal about how confusing this policy is, and some pushback on it just for the amount of confusion that it's created. It's not clear what the implementation of the price cap is going to do to the market just yet, and past the volatility that policy itself may bring. There's likely to be some form of a Russian response to it as well. I mean, Russia's been quite vocal about not selling oil products to countries that implement the cap. So we may be seeing a continued cycle of some of these tit for tat moves here. This is something that's really, I think, kind of highlights the fact that there's growing tension in the global economy right now between major producers and major consumers of energy. That's a theme that I'm not the first one to bring up, but it's growing much more clear, and I think that divide is growing. And we're also going to see, and this will kind of wrap up the demand side of things from my end. But what OPEC Plus has also found difficult, and remember when I say OPEC Plus, that of course includes Russia as well, were the strategic petroleum reserve releases that were authorized by the White House earlier this year. And it seems like we're probably going to get some more now, although it's the SPR is at record low levels, and those releases can only go on for so long. That was a controversial policy to begin with. The SPR releases do add supply to the market, but they don't add long-term production. So they can, in some sense, have an effect of actually putting a floor in a way, but beneath prices sometimes. And bear in mind, finally, too, that the SPR was designed to be used in the event of an actual supply disruption. Whether people should or shouldn't be buying Russian crude and refined products is really not what I'm here to discuss. But from a technical basis, that supply is still out there. It's available. China and India certainly have been enjoying a lot of the discounts they've been getting on it. But the supply is technically there, so it's not as though we're seeing a major outage where, for example, all of Iraq's exports are shut in or something like that. That's not the type of situation we're dealing with here. And finally, there may be some kind of an attempt at a response from Washington to the OPEC Plus decision that's more focused on oil markets than U.S.-Saudi relations. But I think it's really questionable how many policy levers there are to pull there at this point. Maybe more SPR releases. There's been discussion of an export ban on refined products, which I think we'd all certainly hope that the administration quickly comes to its senses on. That would have a lot of difficult impacts on U.S. partners and friendly countries. So that kind of wraps up the demand side, and that goes into it a bit on how Russia is impacted. Getting into the supply side, we do expect that Russian production is going to fall quite substantially next year. Maybe up to the tune of 1.2 million or so barrels a day. It's quite a lot. Russia has been selling discounted crude in Asia, and their response is kind of fine. We'll turn around and sell these things in Asia at a discount, but hang on a second. I mean, the market there can only absorb so much. It's there's eventually an upward limit as to how much is actually necessary. So that's really where things look a bit more from the market view. I can get into the kind of the OPEC plus dynamics a little bit more, and what kind of a role Russia plays there.
Well, you've touched on two things, and you've actually used two terms that I think are good. One was sticker shock, and the other was tit for tat. And I think, again, looking at the firestorm in the U.S. and a lot of it's on the Democratic and congressional side. I don't know that the administration, is talking about, restraining exports, and I'm not sure they're big fans of NOPEC and that sort of thing. But my guess is a lot of people who are writing about this and upset about it probably haven't looked closely at how the Saudis and OPEC Plus perceive that G7 price cap effort. And can you tell us a little bit about it? I mean, because they're basically, from my understanding, I'm not an energy expert, they're going, okay, you're why would we concede to a consumer group the ability to control and prices? And so what I'm saying, I guess, is I think this is something, a process has been ongoing, and even though they haven't named a price, they haven't set price caps, has been very disturbing, I think, to OPEC Plus. The other thing is, you touched on it, is that a strategic petroleum reserve, which I guess in October is the last, scheduled 1 million barrel per day release, but it could be extended. All those supplies are low. Again, that's something that I think you described really well, was a little irritating to them, because there isn't a supply destruction that might cause for this. But anyway, can you tell us a little bit about that tit for tat part? Because I think things like the EU price caps, SPR situation, these aren't widely understood as to why it might play into OPEC Plus's decision to do what they've done.
Right. Well, I'll kind of start with the price cap, because it's the thing I can at this point probably say the least about, because I've highlighted how confusing it is to everybody. What OPEC Plus doesn't like what it thinks of as interventions into the market. Sure, I suppose there's the argument that OPEC Plus, adding or removing supply is an intervention in and of itself. But be that as it may, their outlook is that they don't like these types of government interventions in the form of, whether that is the price cap, embargoes, sanctions, things like that. I think you've heard language from OPEC Plus ministers, not just those representing Russia, talking about politicization of energy markets, right? That I think encapsulates a lot of their perspective very well, even if we could debate whether or not energy markets are inherently political anyway. But seeing these kinds of moves being made from consumers, it really just increases the friction it increases friction in bilateral cooperation, obviously, as we've seen between Washington and Riyadh in the last few days. But the issue of the supply side is that we tend, I think, in the U.S. to think of OPEC as kind of sitting in this position in the oil market where it's holding all the cards. Obviously, there's a history of a fairly negative perception of OPEC in the United States that I don't think I'm surprising anybody by saying that. But the reality is that the group also has a lot of constraints of its own. It's not sitting on this totally unassailable position, as I said before, and that's going to influence the decisions that it makes. So what are some of those constraints? Well, we've mentioned, I think, that the quota subject members of OPEC Plus, of which there are around 19 out of the 23 members of the group, they haven't hit their targets on a monthly basis in over a year. It improved somewhat last month, but as of last month, the gap between actual production and targeted production was still in excess of 3 million barrels a day. That's a pretty substantial volume. And that's also the reason you're not seeing a full million barrel a day cut, as I mentioned before. The underperformance had really been led by some of the major West African producers that are members of what I like to refer to as core OPEC, and in other words, the original or core members of OPEC. That was really Nigeria and Angola, and they're still really struggling. There are a handful of smaller West African producers, Equatorial Guinea, Gabon, that also add to that. But you're increasingly seeing that on the non-OPEC side. A big part of that has come from Russia. Russia has been, well under 1 million barrels a day in terms of its quota for a couple of months now, as well as Malaysia and Azerbaijan that have struggled to hit targets as well. So what this means is that when the group comes up with a number that it wants to use as part of a market balancing strategy, they really are dealing with a set of numbers that exists only on paper. The quota system that OPEC Plus has been plainly broken for an upwards of a year now, and they may be moving back towards ways to try and address that, to try to fix it. But it is certainly something that they have to deal with, both in terms of how they approach their market strategy and how they think about making decisions long term in the future. And Russia plays a big role here. So it's the accusation, I think, of the black and white OPEC Plus or Saudi Arabia sided with Moscow is extremely reductive, and I can get into some of the numbers on why that is. But I think one of the key messages that I'd want to leave you with today is really that OPEC Plus itself is a lot more constrained in this day and age than we think it is. And so when you heard before Barkindo died, he was kind of railing against underinvestment in upstream oil and gas. You have officials from Saudi Arabia that frequently say the same thing. That's part of the reason they're saying it. It's not just because they want more money for the industry or something like that. It's because they really don't want to be looked at when prices are high and say, well, why can't you raise production? They don't like getting rid of that spare capacity cushion that they talk about. So it's a position that they really don't like being in a way.
Well, it's a drum they beat very loudly and persistently for some time now. I know the energy minister has spoken frequently about it, as well as others, and also the UAE energy minister. They've all talked about underinvestment, and they've all shown real irritation with the U.S. and saying, look, you push the energy transition so hard, you've dissuaded, significant investment in fossil fuels in favor of renewable energy. And you can't be surprised this is where we are, is what they're saying. And also, we don't want to be your whipping boy because this is where we are. Well, and that's the fascinating thing about this, and this little frustrating thing about this. The OPEC is saying we made this decision strictly on technical market information and data, and in the U.S. In particular, it's seen solely as political, and clearly there's a communication breakdown, there's a messaging breakdown, and maybe there's some embedded tit for tat of this sort of thing. Like I say, I think the OPEC didn't like the EU price cap, doesn't like the SPR, other things. But they reject the idea that this was all to help Russia, and let's. It'd be interesting to see how this resolves itself. And there's a couple of things that may, in my opinion, but I tend to be optimistic, may help resolve itself. Number one, Congress isn't in session. Number two, when they come back, it is quite possible that the majority minority balance will have shifted. So when these new members do come in January, sometimes things don't happen anytime, between that November and January if some things have shifted. But number three, this action was taken a week ago, the Brent price has gone up $1. What you're seeing, it'll be interesting to see how it plays out. It may play out exactly how the Saudis see it, in that there's significant reduction in demand that this won't move the price significantly up. We'll see how that goes. I'm not sure if you do forecasting or if you make guesses that way, but it is interesting that it hasn't moved much. Anyway, so what I'm saying is because we clearly have a failure to communicate here. We clearly have, in terms of OPEC versus the U.S. and particular parts of the U.S. political structure, completely different takes on this. I guess we'll see what the real impact is over the next few months. But it seems like we're going to have a little hiatus here. We're actually going to get to see what happens to the markets. Would you agree with that?
To an extent, yes. I mean, the price, when these discussions about a potential cut started, it was well before the meeting, and we had gotten to a point where the price had slumped below $90. Flirting with the mid $80 barrel range, and Brent is now above 90 again. I mean, you've heard about the kind of the jawboning effect in the past. I think that got used a lot more when Biden was initially talking about the SPR releases. I mean, I think the price action that you saw immediately after the meeting wasn't particularly notable because that outcome was to a large degree already priced in. There was talk of a cut before the meeting happened. Obviously, the scale was much larger than expected, and it's quite possible. I mean, as the months move on, we're going to see some of these policies come into effect, and we'll see the effects they take. I mean, I think whoever makes the right call on oil from now before, say the first quarter of 2023 is probably going to be dining out on that for a while once they figure out they're right. But that's an interesting point you made about the congressional factor. I mean, I think reading and I'll avoid straying too much into the policy side, but reading some of the commentary that's since come out from the Republican side of the aisle, it doesn't seem like there's as much of an eagerness to turn this into something totally adversarial. I mean, look, it's not to say that nobody was confused by the scale of the cut. It's not that there isn't any room for debate about that. That's certainly not the picture that I want to paint. But the idea that you can say that because this sent prices up, it ostensibly helps Russia. It's a lot more complicated than that. And the quick breakdown for Russia being so critical to OPEC plus is that, I mean, first of all, Russian cooperation with OPEC plus isn't a new thing. It's been around for upwards of 5 years now. The declaration of cooperation was renewed at this meeting, so it'll be around more than likely until the end of 2023. But when I was talking before about capacity on paper, OPEC plus, of the 19 members that are subject to quotas, has around 45.5 million barrels a day. The production baseline, which is not Russia's actual capacity, but it's a number that gets used to determine its quota, is 11.5 million barrels a day. So that accounts for around 25% of OPEC plus capacity on the whole. When you talk about the non-OPEC members, of which there are 9 that have quotas, that's 15.2 million barrels a day in capacity, again, on paper. But Russia makes up 76% of that. So really, this organization is as something that's attempting to balance the markets or influence the markets. It's not viable without Russia. Especially when you add up the volume losses I mentioned earlier from West African producers, and the fact that 3 of really OPEC's kind of legacy members are not subject to quotas. Libya is not. There are periodic supply disruptions that come from Libya really have affected their reliability. I mean, if you look at a line chart of Libyan production since 2011, you can almost get whiplash going up and down. You've got some certainly some discussion of maybe lifting sanctions on Venezuela, but they're mostly offline, and Iran, as we all know, is heavily sanctioned. So those are three fairly large capacity producers that OPEC Plus can't really factor into its market balancing strategy, because they are either under sanctions, they're offline, or we just don't know where their production is going to be. So that capacity being so much lower than what's on paper is really critical, especially given that 11.5 million barrel a day number is no longer applicable for Russia. It's probably at least 1 million barrels a day lower than that now, which, if anything, to a degree makes them more critical for the group. I mean, I'm not, again, to clarify, I'm not sitting here arguing whether they should or should not be there. These are just simply the numbers behind why they are. If you're looking at things purely from a market oriented focus, it's certainly not unanimous that the OPEC Plus decision was a totally technical decision. Of course, that's going to be the public line. I don't want to present the idea that the decision they made is something that people who do look at the market very often are going to go say, oh, yep, that makes sense, because there was a lot of confusion, and I think the scale of it was a big part of that. But the other thing, I think, that one final point, and I'll just leave it at this, is that bear in mind they do have a meeting coming up on December 4th. And they will still be meeting, even though this production policy has been extended until the end of 2023. That doesn't mean it's going to remain unchanged. I mean, if they see fundamentals shifting in a way they don't like, they will add supply. I don't think any decision that OPEC Plus ever makes is totally disconnected from politics. I mean, how could it be? You have to get like 23 oil ministers together and get them to agree on something, right? There's of course there's going to be politics. It's not rocket science. But I think where it gets so hyperbolic for me is the idea that it's like being done directly to influence the midterms and stuff. I mean, even if that's maybe Riyadh sees that as a fringe benefit. I don't know, but I mean, it's such an enormous decision in terms of world oil markets. Like it's hard to see a congressional election being front and center there.
Colby Connelly, senior analyst with Energy Intelligence and a non-resident scholar at the Middle East Institute. Colby, thank you so much for joining us. Great discussion. We really appreciate it.
Oh, great. It was great talking with the both of you. And again, thank you for thinking of me and having me on.